Getting out of a tight spot is the theme of today's top picks from Reuters Breakingviews. Telefonica scraps 2012 dividend in a bid to reduce its debt. And a new broom, Nomura, has a rare chance to ditch the unfortunate Lehman acquisition. Chris Hughes here to talk through these. The Spanish telco, it's been doing extremely well. It hasn't had a good latest quarter. Kind of goes without saying. But you're saying, look, you've scaled back the dividend. That's a good thing. But don't promise to reinstate it too quickly.
Yeah, I don't know if it has been doing that well. I mean, the problem.
Well, it's been when I say it's been doing well over the past couple of years.
Yeah. Look, so the market has been expecting Telefonica to cut the dividend for a while. I mean, the market's been telling Telefonica to cut the dividend for a long time. Telefonica has resisted, but the sovereign crisis, in which Telefonica is trapped in a kind of doom loop where it's interconnected to the banks and the Spanish sovereign, has just forced the issue because Telefonica's own borrowing costs have shot up and now it just needs to conserve cash. So the dividend is going for 2012. Now, on our assessment, it does seem quite hard to imagine the dividend is safe in 2013.
Yeah.
So because the company is so tied up with Spanish problems, if it needs to draw down more on its banking facilities, that puts more pressure on the banks, which in turn puts more pressure on the sovereign. Sovereign yields go up, that puts more pressure on Telefonica. Mm-hmm. It's a real mess, and we still don't have a clear way out of it. So it would be quite rash to think that the payout can be restored. And let's just not think about shareholder payouts here. We've been critical, along with actually the Spanish government more recently, critical of the executive pay at Telefonica, which is sort of investment banker style. It's colossal. Yes. And they have bowed to pressure today and yesterday, and they've said that pay is going to come down. But look, investors have had their dividend wiped out 100%. A sort of 30% odd cut in exec pay from a high level. Does that really go far enough? I'm not so sure. So look, this company, it's done some big dramatic moves in the last 24 hours. In a sense, they may not be enough. Even though cutting the dividend to zero this year may not be enough, it may need to go next year too.
Okay. I want to talk about Nomura. Of course, the CEO and the COO are departing. This is an opportunity, John Foley says in Hong Kong. It's an opportunity to maybe get out of this whole Lehman acquisition.
We think that's probably how the new management will see it. Now,
is that what banking analysts want?
Well, look at the numbers. I mean, the Lehman deal, just isn't delivering the kind of returns that would have been envisaged at the time it was pursued back in 2008. Now, look, I don't want to criticise too much the vision they had in 2008. I mean, it actually was pretty credible. It was that you needed a big global investment bank that could really connect East and West.
Yeah.
And they saw the Lehman acquisition, buying the European part of it out of bankruptcy as a way of actually sort of leapfrogging into that role. But the trouble is that the global financial crisis has gone on for so much longer than they thought, and it just hasn't delivered. And they've had massive, incredible costs from retention payments and all the rest. Now, perhaps if they stuck with it for 10 years, they could become this great kind of East-West investment bank, right? But do they really want to destroy value over 10 years to get there? I mean, I'd be astonished if new management didn't take the opportunity now to review it, because the immediate numbers are very weak.
What do they do? I mean, what happens
there
to that?
There are bits within the Lehman franchise that are actually really good. The fixed income unit is doing pretty well. So it's conceivable that you could graft out bits of the business and then pretty big chunks and sell them and sell them on. It would be messy. Clearly it's been integrated now, but I think what you'd envisage is probably a pretty radical pullback from investment banking altogether outside Japan.
Okay, Chris, we'll wait and see. Chris Hughes, many thanks. For more breaking views, watch our US show. Comes on every day, 12:30 Eastern, 17:30 BST. That's live, of course. You can watch it on demand on the Insider platform and on Reuters.com, and, of course, on the Breaking Views website. I'm Axel Threlfall. This is Reuters.